started with Economics. Has the festival season, along with the GST cut, boosted India's GDP growth? We only have the auto sales numbers and a little bit of others. CNBC TV 18's proprietary data shows car sales from Navratri to Diwali grew 23%. But if you count from Ganesh Chaturthi, that is, when GST sales cuts were expected, sales were up only 11%. Likewise, two-wheeler sales from Navratri to Diwali is impressive at 22%. But again, if you count from Ganesh Chaturthi to October 31st, the sales are up only 12%. Overall, full-year sales for cars maybe 5%, and for two-wheelers maybe 8 to 9%, according to industry insiders who are extrapolating the festive, demand. GST collections in October, they are actually for sales in September. These rose by only 4.6%, while domestic GST collection was up only 2%. But of course, this may be because people, postponed their purchases until September 22nd, when the GST cuts would come into effect. All told, how are economists looking at the economy at the end of the festival season, especially on growth and hence on RBI rate action? That's the question we are asking today. And joining us are an elite panel of economists: Pranjul, Bhandari, Chief India Economist at HSBC; Sakshi, Gupta, Vice President and Senior Economist at HDFC Bank; and Abhishek, Upadhyay, the Senior Economist from ICICI Securities PD. Ladies and Abhishek, thank you very much indeed for your time. Pranjul, you go first, since you're removed from India to some extent by a stretch of water. How does it look that has the festive season made you push up, give an upside bias to your growth forecasts?
So I think the GST cuts have worked. And I think now we have enough evidence to show that firms have cut prices. We can actually see some of it in the CPI data, and we'll see more in subsequent prints. We've seen, all these auto sales numbers that you spoke about. Even if you include the August period, it still shows a double-digit growth, and I think that is meaningful. We've seen bank credit growth inch up a little bit across industry and services. Interestingly, in the PMI that came out yesterday, we've seen that the increase in domestic new orders is faster than the fall in export orders. So on net, I think we've given a positive boost to the economy. So there's a lot of data, that is showing that things have worked well. Another data print has been the stock of purchases within PMI, which shows that over October, a lot of inputs were bought by corporates, which means that they will continue to produce in November. So some of this manufacturing could continue into November and hopefully into December as well. All of this makes us believe that the September GDP growth number could be between 7.2 and 7.4%, which I think is a good number. For the full year, our forecast was anyway on the higher side. It was 7%. So we don't think we'll be making any changes to our annual growth number. We will stick to 7. Also, because in the fourth quarter, March, a lot of these things could change. My sense is we are good right now, but from the first quarter of 2026, we might start seeing a fiscal drag coming in because the government will have to cut back on its expenses if it wants to meet the fiscal deficit target. And it has said in many forums that it wants to meet the fiscal deficit target. So between the first 3 quarters and the fourth quarter of FY26, we could see growth fall. But for now, GST has met its purpose.
Okay. Well, that's a fairly comprehensive reply. And at 7%, that's clearly a very positive number. The only other person I know, I think, is Samira Chakravarti of Citi, who has 7 or 7.1 for the full year. The government and the RBI, of course, are sitting more at 6.8. Sakshi, can you also give a similar analysis of all the numbers that Pranjul spoke about? Tax collections are particularly disappointing, but they have been from the start of the year, whether you look at corporate tax or income tax. And GST, September, at least, the collections are not looking that bright. So your assessment of growth?
Right. Good morning, Latha. I think the initial indicators that we are tracking from the festive season do indicate that there's been a jump up in activity, both in terms of the rural as well as urban demand indicators. A host of indicators that Pranjul mentioned or you mentioned do kind of signal that. My only concern at this stage is that, this was expected. It was expected that in September there'll be some amount of delay in consumption by household, and there will be some amount of pent-up effect that will play out in this festive season, right? So from the perspective of whether I'm looking at, revising up my GDP growth forecast for this year, I think it's a bit too early. I think from my perspective, I would like to see how much of this demand that we have seen during the festive season actually, kind of sustains as we move on into the months of November, December, and then Q1 of 2026. Because, before this festive season, we've been tracking urban demand indicators, and they continued to show the demand was actually not picking up at a very, very strong pace, and things were still very moderate. Secondly, I think we are still yet to see the impact of tariffs, and that's really the big uncertainty or question at this stage. As we move into, the fag end of the third quarter and going into Q4, a lot of the front loading or the festive season demand from the US is going to start fading off, right? So I think we are yet to see that headwind play out in the economy. So net, currently we are at a GDP growth forecast of 6.8%. I do see some amount of upside to this number, as I said, if demand kind of sustains beyond October, especially in the urban segment of the economy.
Okay, so it's still wait and watch, and two headwinds you point out, trade deal as well as fiscal drag, which Pranjul pointed out. Abhishek, we met after the festive seasons and tried to do an initial number crunching. You said there is an upward bias to your number, but you're not changing it. Do you think there is a further confirmation of the upward bias, or the other way around?
I think so, Latha. So clearly auto sales data is quite noisy, but the scale and the breadth of rise that we have seen there is difficult to brush away, particularly the signal to noise ratio for the entry-level car segment, where we have seen strong pickup in demand. This segment demand had been lackluster for quite some time. The signal could be higher. There could be higher signal value there. Also, other data, as we know, are still mixed. I mean, GST collections, you have indicated GST collections on domestic transactions, particularly 2% versus April-September period growth of close to 9%. Also, the import GST collections on import side has been quite strong over the last 2 months, close to 14%. Even in fact, FYTD basis collections on imports has been in the same ballpark and close to double the growth that we saw in the same period last year. So it is possible that some of the stimulus that we have seen in the form of income tax cut, in the form of GST cuts, could be leaking away in terms of higher imports. So that is one reason for caution. In the other big data, I think exports for September held up quite well,
yes,
despite contraction in exports to US. But what we have seen more recently, in recent weeks, is that rupee has been under quite a bit of pressure, despite strong RBI intervention, which could well be a sign that the BOP flow dynamics remain on the weaker side, and it could partly be on account of some weakening that we could be seeing now on the export side.
Yeah.
So the big elephant in the room really is whether we are able to quickly sign a favorable trade deal with US. That could be a key driver of demand as we move outside the festive season now and towards the back end of the fiscal year.
Okay, point taken. But can you all quickly give me your numbers for the second quarter, and which is due on November 29th, and for the full year? Pranjul, you stand at 7.2 for the current quarter? I mean, for the second quarter?
Yeah, 7.3, yes.
7.3 second quarter and full year 7. Sakshi, your number?
For Q2, we are at 7.1 and full year currently at 6.8.
Okay, and Abhishek?
We are tracking quite close to 7%, but some upside is there. Government spending has been on the weaker side, particularly on the revenue.
But the 7 is for the full year.
Could have been for the second quarter. For the full year, we are at 6.7% for now.
Okay. All right, fair enough. So the consensus is that the second quarter at least is going to be between 7 and 7.3, and adding the first quarter 7.8, we are practically at a 7.5 for the first half of the year, which is a fairly strong number. But Pranjul, with this kind of a number, how do you approach the December policy? Will the Reserve Bank say, which appears to be Poonam Gupta's last public address that there is space, but will we need to do it now? That seemed to be, I'm paraphrasing it badly, but what's your sense?
Yeah, it's not going to be an easy one. I think it's going to be a close call in December. If the trade deal between US and India is not signed by then, I would say that there's a good chance that a rate cut does happen in December, simply because I think the pain of the export slowdown will be felt in the next couple of months. And this boost from GST, especially after Diwali is over, will also start coming off. So my sense is if there's no trade deal, there are strong chances that December could be a rate cut. If we have a trade deal by then I think this big growth drag, which could actually cost us about 0.7 percentage points of growth over a year, could go away. And my sense is that then, we can sort of wait and not cut and think about it later in 2026. So I think a lot depends on whether the trade deal happens or not.
Okay, we've always prided that we take our decisions on domestic matters, but in this specific case, it's going to be a bilateral issue of a trade deal that may move the RBI's hand. You agree, Sakshi?
Yeah.
Cut or no cut?
Agree. No, I mean, it's a close call, and I agree with what you're saying. I think it's a binary decision, and to borrow words from the US Fed, I mean, the December policy right now is not a foregone conclusion.
Okay.
It really depends on what happens to the trade deal. I think that if we don't get the trade deal in the next few weeks, I see a very, very high possibility of a rate cut by the RBI in the December policy, because we have to remember that, over the next, apart from the Q2 number, once we start looking at GDP numbers from Q3 onwards, the next 3 or 4 quarters is also going to have a very adverse base effect, right? So that is going to pull down your overall GDP growth numbers and the other risks that I spoke about.
Okay, fair point. Abhishek, where would you stand?
For me, Latha, the bar for rate cut in December is quite low. RBI has indicated there is space for policy action, and that in central bank speak should mean very high probability of a rate action in the December meeting. Yes, it is possible Q2 growth data surprises higher than what RBI has penciled in. Also, there could be a scenario where we could sign a trade deal with US based on the rhetoric that we have been getting from various officials in the run-up to the MPC meeting. That said, there are still, on the inflation side, as we know, we are still tracking quite a bit lower than the inflation forecast for the current quarter, which RBI has put out at 1.8%. So inflation story continues to be positive, although led by food and some one-off factors. But overall, the sense is that underlying inflation is tracking close to 4%. Some people think it is lower, but we think quite close to 4%. On that basis, and with still some uncertainty about the growth outlook, there is definite scope for one more round of rate cut before RBI considers a long pause.
Okay. So, well, the verdict seems to be a 7% plus growth for the quarter that just ended. For the full year also, we are very close to 7%. But on a rate cut, one person more finding it more likely, the other two want to hold on to see how events pan out. Ladies and Abhishek, we have to take a quick break, but I want to prod you all for whether there is a likelihood of an OMO RBI purchase anytime in the second half, as well the huge drama on the currency. Those questions after the break.